You know, you wake up this morning and you wake up and the first thing I heard and saw was, obviously, I get up middle of the night looking at the markets, and I mean middle of the night, 2:33, and I'm seeing breaks in the stock indices, and then I'm reading what's going on in Japan is the Nikkei is tumbling. By the end of the day, the Nikkei had lost everything it has made for the year. So it had this stellar performance in July. I mean, absolutely stellar, and lost it all. Closed today 12.5% lower. Right now, and as I said, we're sitting here just after 7 p.m. They just opened in Japan, and the circuit breakers have been triggered to the upside. So this is not for the light or faint of heart is what I should say, not light of heart, but faint of heart. These are wild markets. In our stock markets, if you look behind me in this whole board, one stock was up, AMC, by 1 penny. Everything else down. I can tell you that in early evening trade at this hour, all the stock indices are higher. Whether that lasts into the morning, who knows? I mean, you're really talking, for most of you, you won't get up till 6, 7 in the morning. It's going to be 11 or 12 hours. I don't have any idea what it'll do, but I'll point out those different things to you as to the reversals that often happen on a Tuesday. That's why they're called Tuesday reversals. You're going to get the U.S. trade balance data tomorrow at 7:30. Red Book Group will come out with their retail sales. They've been tracking under 5% now, closer to 4.8%. And API will come out at 3:30 with their estimates for stockpiles up or down in the energy and the products. So that's where you're at on that. All right. I put out tonight on the website, so when you go to that at iraepstein.com, you'll see there is a special video. It is right with all the other videos. And I give you an idea where you're at, and I cover how the markets today broke to the 200-day moving average of closes in stock indices and why they often get a bounce from there. I didn't say a trend change right now, but a bounce, and that's what I'd expect. Amazon has gaps in the chart, and you've just lost a fortune in this market. It has gone from 200 into 151. So we have a 25% break in the market already under our belt. Gaps like to get filled in charts, so don't be surprised that when the market bottoms, you get an attack of that. You have a pattern of a higher high and a vertical drop that just plain let go on the market. You didn't pay any attention today whatsoever to the, or Friday, to the 200-day average. You just keep plunging, and you're underneath the Bollinger Band. You're in a free fall. How far down it wants to go? Well, I can't answer that as a chart technician. I can tell you that it's rare that you spend more than 5% of the time under the Bollinger Band. I can tell you that in stocks, typically you're 5 days, and I'm stretching it to the most, 5 to 7 days. I've seen 9, but I'm giving you what the norm is. And I could see this market on rallies having resistance back up at 168.68 to the Bollinger Band at 167.10, about $6 higher. Certainly there's a lot more resistance up here because you've just had a bearish crossover where the 18-day average on a closing basis got under the 100. So the market's lining up bearish at this point in time. You are in an area here where you're oversold. You have readings under 30, and it's not embedded. It's a washout. And the market didn't like, as you know, the CapEx spending on AI chips. I did. I think Amazon is wise to do that. I still say this is, if you go shopping, this is your go-to place. But like everything else in the market, the sky was the limit. Think back 2 weeks ago, 3 weeks ago. Every time we made a new high, all we kept seeing is different firms coming out and raising their forecast targets, not only here in Amazon, but in the stock indices. When we get to them, I'll show you what I mean. In CrowdStrike, while it's not on my board there, you were up today nearly 2%. So you're embedded, you're getting a bounce. I contend this market will get sold on this rally, not here, a little bit higher. Today you made a lower low than you did Monday. If you've taken, Friday. If you've taken my enhanced Bollinger Band course. I teach how to work with this in there. If you haven't, I'm not going to explain it here. In URA, for those of you that have wanted me so badly to, I had one person ask if he could be an apprentice of mine, and I said, why are you so married to uranium? You're like so focused, that's all you care about. And I said, I'll cover it a bit, but it doesn't look like you should be focused on it at this point. I will eat my words one day when this comes back, but this isn't the place to be at this point in time. And when you're that focused, you're not going to do me any good. I want people that are just focused on a chart, action, not an investment. And when you become that way, unfortunately, that means you're reading news, you're doing all your research, you can't figure out, you're miserable because it's not going in your direction and you're not able to think straight. I've done this 50 years plus. I know the game. And if you're a trader and come from that, and I was brought up on the floors, ran trading desks, traded in the pits, you learn these things. The hardest thing for me in the pit was reading people, and I was never good at it. I'd be wanting to buy a small amount or sell a small amount, and the guy next to me is offering 10 times, 20 times that. He didn't know what he was doing, but he scared me off over and over. When I got off the floor, I found that the game was even for a guy like me. But I was never good at a poker table either, okay? People could read me, but in my office, you can't even see me. Higher high, lower low, and you can see where the market's fighting. Rivian is paying attention to the chart action. Yes, it overreacted, but it is paying attention to the action. And the question is, for some people, this is the kind of market where you should be taking out a shopping list and saying to yourself, okay, I have been talking that I want to buy Rivian. Do I buy 5–10% of what I'd want to own down here? I want to own Boeing on this break. I've been waiting for a pullback. Do I buy X% on this? That is different than a charting, what I do. And I do mention that in my reports, and I tell traders in my morning subscriber video to do things like that. So don't think I just stay focused. I tell them, you buy it and you look at it 6 months, a year down the road. Will you pick the bottom? You never will. But do I think a company like Boeing will come back? How could it not? Has the worst happened? It has. In Rivian, we had this big run-up. We saw all that's gone right for it. And as it's pulling back, there's a number. Is it the 200-day average in the Bollinger Band? It's one of them. The next could be the 1195, but I'll bet you're in that ballpark of where the market is going to get picked up by those type of people. In Freeport, you're still dropping down because China, which is really what is needed, needs to do something to spur on the consumer. And they've done nothing. They're helping exporters, but they're not helping the consumer. And these people are petrified. Nobody's investing with a brain about them, in my opinion, in the Chinese stock market unless there's nowhere else you can invest. Why? You don't get the right information. So you're trading blind. I mean, I assume you have inside information if you want to do that, because the government has made certain that you don't see cash flows. It's not giving you what you can do. They're limiting short sales. They're limiting when you can get out of big orders if you own something. Go enjoy yourself. Higher high, lower low, and you lost the bullish embedded reading. But, it stopped dead in its tracks at the 18-day average. It's actually bullish action today. Here's a market that didn't fall apart with everything else. Home builders, yes, they let go a lot more. We just talked about this, that they might go down to the 100-day average in the Bollinger Band as they on Friday closed under this number, and kaboom, right on back down here. Over the weekend, I was showing some ideas on that on my weekly charts too. All right, so that's where I think the pros covered shorts. I didn't say they're buying, but that's where I think they covered, if they were short, where to cover. In XLF, you just slammed through everything. I don't know where there's support in this chart. The financial sector just got really hemmed in. What I can tell you is on the way up, theoretically, the 41.51 to 41.53, the 100-day average in the Bollinger Band, should offer some form of resistance, that combination. The band will fall tomorrow lower, but the 100-day won't move very much. In XLI, markets first move under the Bollinger Band on rallies back to 123.53 in an oversold market. I can see this market rallying back up there. Is it that far? It's $3. I don't see why it can't get there. It's overdone to the downside. It's not bullish. XLE, again, this market tried a true breakout and didn't get it. In order to get a breakout today, you had to close near the day's lows in the very bottom quadrant there. Let's call it 8,600 or under. You didn't do that. Yes, you've come out of this sideways action, and on rallies, I think it'll get sold, but it's not a classic breakout where you get two of those moves, and then the market starts riding down the Bollinger Band. It could happen, but I don't see it right here. In GDX, the support should have come in at the Bollinger Band, and what it did is the market dropped sharply on the opener and came back up the rest of the day to try to fill that little bit of a gap that's there. But as I've said all the way through, if gold's no good, you don't want to own the miners. They're not going to lead you on this upside. And silver, which fought a very big battle last week at the 100-day average in a downtrend, I want to make that clear. Let's remove today's action. Lower highs, you had them back here. Lower highs, lower lows. If this lets go, and I have no way to know if it will or won't, but if it lets go, then the next support's 24.71, then 23.66. What did the market do? Oh, what did the market do? Boom. It goes right to 24.44, holds the lower band, and gives you a bounce. Resistance, in my opinion, will be up in the 26.05 area. Then we get to COPX, higher high, lower low, back to the lower band, a market that is still not showing any sign of a bid coming into it to make sense. And we know what's going on in TLT and BND. The world is saying interest rates, certain technicians or analysts like Jeremy Siegel out of Wharton, today he starts 7:30 in the morning. The Fed's got to go for 75 basis points. They're far behind the curve. That part I agree with. The 75 I don't agree with. And they got to do it right now. An emergency cut. Why? Because the stock market's down? 114,000 jobs is still not bad. We know the economy's slowing. And Jeremy knows, as we do, me and other geniuses out there, of which I'm not one. Does the Fed get it right? No. The Fed is generally 50-50 on calling the shots, period. Go back and read history. Were they too late with the pandemic? Absolutely. You know that. And then they had to go on a cutting spree. Are they too late now as the economy's starting to roll over? Probably. Will they have to catch up? Yes. Can they? Yes. But whether they did a July cut, and that would be so out of character because we didn't have the jobs report. They might have. We didn't know that. That's what set everything off finally, and we see it. Okay, if they had the number, they could have made it. They may not have wanted to spook the market, and to have them come out now with an emergency cut, I would like to think they're more independent of what stock prices do than that. But could they? They're the Fed. They could do whatever the heck they want. Do I think they will? No. Do I think a lot of people are calling for it? Absolutely. Do those people think it's the right thing? They absolutely do. Are there people that think 50 to 75 points, like I mentioned, Mr. Siegel? Absolutely. So I can't argue that, all right? I'm not going to. But I don't think it's needed. Not yet. In UUP, the dollar has gone into a state of collapse. You know, if you watch the yen, the euro, and the Swiss franc, those three currencies marched up dramatically against this, and now the market is down. Is it getting overdone? It is. I thought that the dollar might go back to the 100 level in the futures if it broke down, and it looks like we're headed that way. In the FXE, be careful up here, all right? You're at an upper Bollinger Band. It's a vertical rise. That's often a spot for resistance. Tuesday's coming. You can get a one-day reversal in a lot of these markets. So, is it time to panic? It is not. Is it time to look at your shopping list of some things you want to buy on breaks? I think it is. On rallies, could you do rotation in your portfolio? Yeah, if you're not comfortable with where you're at, that's absolutely the right thing to do. And if you can't handle the heat, then you got to get out of the market, okay? So that's always the thing. If you are uncomfortable, learn that. You get out and you get back to the point where you're comfortable. I cover these trading ideas, my philosophies, money management, and so on in the free offers that we have on our website. Part of this is in our trading kit, by the way. And when you go there, you'll see that you'll get these areas. They're all on our webpage, and you click the blue as to what you'd want. It'll put it into a cart, and at the bottom of the page of this, you will get to an area where it asks you for your email address, your name, do you have any comments for us? And we will get this sent out to you. We normally do it, and it'll look like that as it comes on here. We'll get that out to you typically within 48 hours. So you'll get this pretty fast. We may have to reach out to you if you want charting software, and expect a call from us, because the exchange won't let us give you quotes for it in any manner without other information. In other words, your name, your phone number. We don't need it. They need your phone number. Their requirement, their quotes, and that is what they're entitled to do. They say they don't share it with anyone. We believe it, and we'll let it go at that. So if you'd like to get this, go to iraepstein.com, free offers. Move your cursor up here. You'll see an icon. Give it a click if you want, and I'll catch up with you all in the morning.